Of the biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap here on Friday, May 26th. I'm, of course, joined by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, it's good to be here. It's been a few weeks since we did this.
It has been a few weeks. It's been busy. Lots has been going on, and we're entering summer, but I'm so glad to see you again. So I'm glad we can jump back on things, and it's a big week, lots to talk about. So we're going to dive right into it. We're going to talk today about some Canadian bank earnings that came out. You're going to tell us what happened, how that affected the market. We're going to talk about Fed funds. There's been lots of that all over the news, so you're going to explain what's going on there. And then, of course, that's going to lead into talking about the beautiful debt ceiling that the U.S. is quickly approaching, what their plan is for that and how that's going to affect the markets. We're going to talk about a teeny tiny little company that came out with some earnings today or this week, Nvidia Corp earnings. If you haven't heard the name, you probably will soon. We'll tell you what happened there. And then, of course, we're going to get into some CSE issuer news. So let's start off right away. Bruce, what happened with Canadian bank earnings this week?
Well, as you know, different companies have been reporting their earnings over the last several weeks from the first quarter, and this week was heavy on the banks. So we had 4 of the 5 Canadian banks report, and for the most part, what we did see was that the earnings disappointed, and really where you would have expected them to, probably been fairly strong because of net interest margins. One of the things that we saw from the majority of them that reported were that their loan loss provisions were moved up or increased, one of the two or both. And this is really just because, they're concerned about higher interest rates and what effect that can have on the future recovery of the money that they've lent out to people and businesses. And so what we saw was CIBC was the one bank that kind of beat the numbers, and the rest of the banks missed. And you can see that, the day that we had a few of them report there, which I believe, if I remember correctly, was Wednesday. They all sort of dropped down. Then yesterday we saw Commerce report, and it was up on the day that they made their numbers. So it's always kind of interesting to see what happens with the banks. If you look at kind of the chart here, this shows over the last last month, but if you looked at a chart over the last year as well, the Canadian banks haven't been super strong, which isn't that surprising considering kind of where we're headed from an economic standpoint and what's been going on with interest rates.
Okay, so for those that invest regularly, I mean, Canadian banks have always been a bit of a darling globally, I think, as far as stability and security. My question for you, Bruce, is one would assume with interest rates rising that the bank earnings would do better. So is there a reason? Is this surprising information, or is this typically what happens?
I guess what you've seen is because of those rates being higher than what's happened is that they're concerned about, those loan losses that they potentially could incur in the future. And so they've had to set aside provisions for those to make sure that they don't have those and they won't negatively affect their balance sheets. And it may turn out that that's not the case. I know, when I have looked at some of the, foreclosure data and delinquency data, the delinquency data is, coming up a little bit, but the foreclosure data really hasn't increased that much. It actually, some of the data that I saw was actually going the other way. So, one of the concerns that the markets had, since rates started coming up was would borrowers be able to accept these higher rates because they went up so fast, it was hard to adjust. But, it looks like people have been able to, really tighten their belt in other areas, I guess, so that they were able to continue to make these payments.
Well, that'll be interesting to watch as we see 5-year terms start to come up, and we'll start to see that. So people that have been traditionally locked in for quite some time now in some really exciting kind of low interest rates, in their real estate, those 5-year terms are going to start variable 5-year terms are going to start coming up and could dramatically increase people's mortgage payments. So we'll see what happens there. Okay, let's make our way across the border. Bruce, what happened with the Fed?
Yeah, well, nothing's happened with the Fed with them specifically, but the data is changing a little bit. So, the market was anticipating that inflation was starting to slow down. We're now seeing just a little bit of inflation in a few areas. So as a result of that, what we've seen is a change in the perception of what's going to happen with the Fed funds. So the next meeting is up on June 14th. And this chart here is just looking at the two different bars. The bar on the left represents whether or not the market anticipates that the rates are going to stay where they're at, so that the Fed won't increase interest rates. And the bar on the right is that they would increase by 25 basis points. And if you look at these bars, they've actually they almost flipped. If you go back a week ago, most people were thinking that that it was over around 60% that they wouldn't increase, that they would keep rates where they were. And now it's the other way around. There's about 60%, 64% that think their rates are going to go up. And so it's going to be very fascinating to see what happens over the next couple of weeks, and also what impact that has on the market, because the market was anticipating that, based on the last Fed meeting, that they possibly could be done. They didn't say we're going to be done, but they said we could possibly be done based on data. And that data is still staying a little bit higher than what the market would be comfortable with and what the Fed would be comfortable with. So they may raise rates another 25 basis points in the June meeting, or possibly the July meeting.
And I mean, they're always anticipating what's going to happen, but really it comes down to the data that comes out about how aggressively we're attacking, the increase in inflation. So from my understanding, inflation is kind of sticky right now. You hear the word sticky a lot these days around inflation. It's kind of sitting, am I correct in saying it's sticking around 4 to 5%? It's just not kind of pushing down much. So they just have to keep increasing rates until they can kind of ward it off. Is that right?
Yeah. So they're playing this balancing game between trying to slow things down with consumption so that, we don't go into a depression or a recession. And at the same time, trying to slow it down enough so that people don't spend as much, so that inflation starts to come down. We've seen inflation, if you go back a year ago, it peaked at 9% last June. And we're now down, we just under that 5%. So like 4.9. We'll see a new reading here out shortly. And we'll see where it goes. And it's trending down. The two areas that have been, what all the economists refer to as sticky, haven't come down the same amount that everything else is. One is wages. We probably aren't going to see wages come down, but what we'll see is the wage growth increase, the increase in wages. The wage rate isn't going to increase to the same degree. It'll stay basically flat, but that takes a while because, just as we saw, there's been, a couple of, bigger, not pensions, unions that have negotiated, even here in Canada. You think about the WestJet situation where, they've negotiated higher rates, right? So that's still coming through the system. And then the other one is real estate, and not so much real estate prices, but more rent prices. And that is one that, the market's looking at and saying, well, this is going to come down in the future because there's quite a bit of supply that's going to be hitting the markets that's going to have an impact. It's not coming down yet. It still keeps increasing, but it's going to in the future. And so that's one of those things that the Fed has to weigh. Like they know, and they see all that data as well. So they know that all the supply is coming on the market. What impact is it going to have on the actual owner's equivalent rent?
It's a tough job. I don't want their job, that's for sure. Okay, let's talk about debt ceiling. And I feel like it's not a ceiling. I feel like it's the roof of, like a sunroof of a car. It kind of opens and closes and moves around and shifts. Wouldn't you say that's more accurate than a ceiling?
Yeah, for sure. I mean, they have this kind of arbitrary level that they can't get above. And then, I guess it was over a decade ago now was kind of the last time that it was, big drama, but they had to increase it. And that's what they're doing or negotiating now. And, I think most people recognize that they can't let it go to the point where they aren't able to increase it for very long. And, they may be able to do it for a few days, but it just really cuts off, kind of all spending by the government, including, pension checks and services and, everything that's in between. And politically, it would be horrible for those politicians because they would get so much pressure on them. But they, of course, go back and forth in the political game they play and try to get concessions and try to get the things they want in other areas. And that's what it ends up turning into. And the market has been, significantly calmer than what it was back in the last time this happened. that the last time this happened, I think the market was off something like 17% over like a 3 or 4 week period, worried about whether or not the US was going to, kind of default, and it was, downgraded, and that's what happened. This time we haven't really seen that. The markets in certain areas have drifted lower. It's hard to specifically pinpoint if that has been the debt ceiling or if that is, other factors. What I was just showing here was that, as the uncertainty grows in the market, one of the areas that people go to is US cash. And so this is just looking at the US dollar, and you can see that, kind of over the last month, it's really been increasing. And, it was a lot higher last year, sold off, came down, which was kind of more of that appetite for taking risk in the market. And now it's starting to increase here a bit. We're still seeing the markets, the broad markets do fairly well. But the issue is that the participation has been pretty narrow. So we have to keep our eye on this US dollar and see what it's going to do. If it kind of holds the line under the 105, or if it breaks above that, then it could mean things get a little bit more difficult in the equity markets again.
Yeah, I mean, this is definitely going to have a direct relation to the markets. This is going to affect it fairly dramatically. I saw that a big part of this discussion and this 11th hour deal that they're trying to put together to raise the ceiling debt is partly as they're discussing the 2024 budget. They're discussing a 2-year debt ceiling hike. And my question for you was, that seems like a really short amount of time to do something this dramatic and then to try and bring it back down in 24 months. What do you think?
Yeah, I mean, it's unfortunate that that's where they're at. I mean, that's, I guess, one of the negotiating points that they've come down to. Nobody wants to give up too much, probably, this close to an election either, because they both want to show that they've won, when it comes time to get to the election. But 2 years isn't a lot of time. If we had to be going through this again in 2 more years, it's, it's something that I'm sure most investors, most politicians probably love it, but most investors and most, people on the street don't really want to deal with this.
People don't want to hear that it's a 5-year, hike, but let's be honest here. It's hard to imagine that they'll have this organized in 24 months. Okay, let's talk about some fun news in the market. Nvidia Corp earnings. So Nvidia, which I hadn't heard before this week, and maybe most of you haven't, is a company that suddenly became one of the most valuable companies in the world, I believe. It's a video game computer chip maker, and it specifically is geared towards video games that have, heavy data, and they kind of became a kingmaker this week with their AI boom, or with the AI boom that we're seeing. I think they neared $1 trillion in valuation, which did well for them in the market as they brought out their earnings. So what did we see?
Yeah, they announced their earnings, and it was, earnings that were fairly widely anticipated because of the fact that the stock's been doing well, really this year. It's done well over time. We saw the big correction last year in a lot of technology. It's been doing well this year. There's been so much talk of AI, and it was already up, at fairly lofty levels as far as valuation. And they came out with their earnings, they beat their numbers, and they guided up that they were going to be taking their revenue even higher than the street had expected. And it had a huge jump up the next day. It was up 28% yesterday in trading from Wednesday. And that added about 200 billion in market cap, which interestingly enough is more money than they've actually made in revenue since 2002.
I love it.
Which is what they added yesterday. And yeah, they're starting to approach that $1 trillion level. So I think they're around 800 billion right now. So another day like yesterday, and they'd be there. And what's fascinating about this is there's been so much talk of, kind of AI and how it would change things. And they're coming out and guiding that their revenue is actually going to be 50% higher next year than it was this year, because they're seeing such a boom in demand for their chips.
Well, good for them. I mean, this is incredible. My question for you on this is, are are we going to start seeing tons of AI companies? I mean, typically stories like this really do they push forward a movement in companies in the space to be able to raise capital, for companies to do well in their own share price just because they're associated with the industry, and new companies that come to market that are in the space. So what's your crystal ball say?
Yeah, certainly it has been a fairly heavy topic this whole year. And companies who threw AI into their press conferences or press releases often get a bump in their share price for a day or two. You've seen quite a few of these semiconductor stocks doing really well. The semiconductor index is moving up to highs for the year, and so it will probably continue to be a focus. Longer term, a lot of people think it's going to revolutionize the way we do business, similar to to what the internet did. Just a couple of anecdotal things that I've sort of seen along the way. One was there was a trader chat group that I have on Bloomberg. There was an individual on there who used to be a lawyer, and he was saying that he feels that if AI is really what it's billed to be, then probably 50% of the lawyers in the U.S. could be out of work over time. I know that there's also lots of talk that AI can do investing, and that it would certainly change the investing landscape as well. And we've looked into some AI tools at our firm as well, just to see kind of what they're capable of and what they do. So it'll be fascinating to see where things go here over the next probably decade with AI.
It really will. There's going to be so much development that happens there. It'll be exciting to see. Okay, we're going to get into my favorite part of the show, which is the CSE issuer news. Today, I'm going to talk about a company called BZAM. Some of you may not know this name, but you may recognize the name, the Green Organic Dutchman. They were one of the early onset companies that really came to the market in the Canadian cannabis space. They moved to the CSE in 2021. Welcome to us in 2021, if I haven't said it already. And they've just gone through a bit of restructuring in the company and changed their name to BZAM. They are a multi-licensed Canadian cannabis producer with a focus branded on consumer goods, innovation, quality, consistency, integrity, and transparency. They just announced that their chairman is doing a private placement and infusing the company with $5 million in capital to help with working capital and general operations. They also announced that their subsidiary, the Green Organic Dutchman, entered into a strategic distribution agreement with 4C Labs in the UK. So they're obviously expanding into the UK or expanding further. So this is all really exciting news. Congratulations to BZAM. My question for you is, this must be a great sign for issuers when they have their chairman infusing this kind of capital directly into the company. And two, my second part of that question is, we haven't talked about the Canadian cannabis space in a while. We talk a lot about the US, but wanted to know your expert opinion on what you're seeing there.
Yeah, anytime that board management chairman comes in and writes a check for $5 million, it certainly gets our attention. That's really a huge vote of confidence when people are willing to put their hard dollars into their own company. So that's certainly one to watch from that perspective. The Canadian market, yeah, I mean, it continues to grow. It's interesting, if we go back to when this all started back in, kind of 2014, 15, 16, when we moved towards legalization in 18. One of the things that we sort of projected was what the size of the Canadian market would grow to be, and that number was kind of in that $7 to $8 billion range. Right now, we're topping around that $4 billion, which makes sense because as prices have come down in the Canadian market, a lot of the illegal producers have been kind of priced out of the market, or it's now at least as price effective to go to a cannabis store as it is to go to your illegal supplier. So that's great. And then the other thing that's happening in Canada is, and this is kind of the unfortunate part, but it's helping the Canadian market, is that we've seen a lot of rationalization. So we've seen a lot of these big facilities that were originally earmarked to grow, thousands of grams of cannabis are now being mothballed. And so what that's done is, that's made it more competitive for some of the other producers that are still there that are able to produce at a low price. So we're getting to that point where, it'll be rationalized, where you're going to have a lot smaller black market than the regulated market. And you'll also have, probably a few fairly big producers, and then you'll have, some small niche producers that grow and produce really high quality products.
Awesome. I love it. Well, I always love to talk about cannabis. We haven't talked about Canadian in a while. Hopefully many great things on the horizon. Again, congratulations to BZAM. It's great to see what you guys are doing. Okay, Bruce, what are we thinking about going into next week?
Well, it's kind of a shortened week, not for us, but for the US. So trading volumes are going to be off a little bit on Monday because the US has their Memorial Day weekend. And then the rest of that week is going to be focused on some of the data that we look for, and then also that debt ceiling discussion.
Awesome. Okay. Well, listen, you have a wonderful weekend. I look forward to, I think I'm joined by Jordan next week. So I will, I'll chat with Jordan. Good luck on your travels. Next week, the CSE is hosting a webinar on ESG. Go to our website and you can check out the details. It is in anticipation of our big summit that we'll be hosting in your neighborhood, Bruce, on June 27th, the Summit of Responsible Investment. Thank you everyone for joining us again today. We'll see you next week. Have a great weekend, Bruce.
Thanks, you too.
Thanks.